Hey guys, and welcome back to another video here on the channel. If you're new, my name is Brandon. As always, we do have our Investing Academy. It's that first link down below if you're looking for courses and training for beginners. But in this video, we're going to be making an absolute bear case and looking at things in the worst way possible regarding our current market going forward. And this is actually a part 2 to the video we did last week. We did a really fun video talking about a bull market case. So talking about all the positives and all the bright sides to this market in the case that we do still have some upside left in us. Now, we did get a couple comments, and I had planned originally to do the polar opposite of that video and talk about the negatives. And again, I'm not trying to say this is what I believe, or I'm not trying to sway you guys one way or another. You know me, I'm dead smack in the middle of things, just kind of riding this market out as it goes. But it is a fun exercise to really look at the extremes, and then you can kind of piece together the different opinions and thoughts and kind of find where you land. And at the end of this video, I'll give you guys some tips and advice on how to play this current market regardless of where it's headed. But if you guys enjoy, give this one a thumbs up. These points are in no particular order. Well, I shouldn't say that. The first point I had here, I did want to get out of the way. And the first potential reason why this market could be heading lower in a worst case scenario is, of course, that we are going through an economic slowdown or a recession. You call it what you want it. And I did want to kind of knock this one out because this to me is the most obvious of the bunch, at least out of the points we have here, because when we go through a period like we are going through now, and for those of you that are a little bit loose on the actual term recession, we don't know whether we're in a recession, FYI, until we look back, because based on the technical definition, a recession is 2 consecutive quarters of negative GDP growth. We very well may be in that right now, but to officially categorize it as a recession, we'll have to wait a couple months and then look back. So you can make the decision for yourself, whether you feel we're in one or not. Point being is that when wages are being cut and when jobs are being lost, when a household, to put it simply, is receiving less money, that has a massive trickle-down effect into the economy, and correlated should impact the stock market. If you lose your job and you're not willing to go out and buy that new iPhone because you don't have as much money, or you're not going to splurge out on that family vacation or book a cruise or whatever people been doing these days, if you're much more likely to just kind of stay reserved, stay home and hoard up your cash, whatever you got, companies like Apple, companies like Booking.com, companies like Air Canada, everything around us starts to see a decrease in revenue. And we're seeing that now with many cases. We're actually seeing some bankruptcies already coming out of this whole COVID situation. Hertz, JCPenney, Bombardier was another interesting one that we just came across quite recently. So whether you want to pinpoint that on COVID and the lockdowns in the economy, or maybe you're someone that just feels that it was time for our economy to just turn over, which does happen. That's part of a normal cycle. We come across these contractionary periods. The reality is that the stock market does not perform too favorably during a period like this. Point number 2, which has, funny enough, kind of taken a backdoor with everything that's going on in our world, is that there is a very serious chance, and from everything I hear, an actual probability that we are going to face a second wave of the virus outbreak. And it's funny. I mean, there's nothing funny about it. I don't mean to say funny like this is funny, but it's funny how it seems like coronavirus has just taken a backdoor with all of our protests and everything going on in the world. I sure as heck know that I've started to hear less about it, but the reality is it didn't just go away. It's still lurking around, and I believe yesterday I saw some cases. There's a second case spike up in Florida. I'll have to double check my facts on that. But until this vaccine does come out, whenever that is, and I'm no scientist, but from what I hear, months and months and months down the road, this probability of a second case absolutely is still on the table. And if we were to go into, let's say, another lockdown or a quarantine, I don't see how the stock market could continue to go up. I think if we went into a shutdown of equal size that we went into a few weeks ago, or even worse, to me, there's no question the market would drop. But then again, it is doing some crazy stuff right now. But let's not forget, point number 2 is that this coronavirus is still out there, and it is still playing a very serious impact on our economy. In fact, what I have listed here as number 3 is that when we do get back to normal, are we just going to be expecting a new normal in terms of businesses, the way they operate, in terms of capacity? I know a good example we can take right now are the restaurants, which have tables closed off. I know I just went to get a gym pass renewed at one of my local gyms. They weren't even taking on any new members, which is just, you never thought the day would come where a gym has to turn people down who are trying to pay and give them money. But is this going to be the new normal that we're going to be living through going forward? I'm not in a position to be making any judgments or guesses or assumptions, but if that's the case, and if companies just have to operate under social distancing laws going forward, if they just can't operate how they were before, well, that clearly is going to have an impact on the performance of the stocks. If they're not able to pull in as much revenue, pull in as much income, it's just less traffic in the door equals less income for a company, which in theory should result in the stocks going down. And again, there's nothing to say that that won't be the new normal. We touched on this in the last video as well. And another potential reason why the market could be in for a whole lot worse than where we are today, although it is expected that these companies are going to report terrible earnings over the next quarter and possibly going forward, when those earnings come out and when they actually start seeing the numbers, this could really be a reality check for investors. And it's easy to say looking from the outside, oh yeah, the next earnings reports are going to be bad, this or that. But when we actually see on paper the fact that these big multi-billion-dollar companies are seriously facing some significant struggles, could this be a reality check to investors that have been propping up the market this far? Just kind of makes sense of the severity of the situation we're going through, because it's not pretty. And one of the things I had listed here was you take a look at some of the super investors, the smart money, the hedge fund managers, the big money managers that we've kind of known to look up and idolize, those types of people that we look up to. For the most part, at least some of the ones that I follow, they have not been doing a whole lot of buying. At least not as much buying as I would have initially expected. You take Buffett and Berkshire Hathaway as a good example, where they are sitting on billions of dollars in cash. If you would have asked me months ago whether he would have been looking to deploy that on the next market drop, I would have said, heck yeah, that's what he's saving up for. He's been waiting for years and years and accruing all this money, and he's just itching, chomping at the bit to deploy it. Yet the drop that we saw a couple months back, not only did he not do a bunch of buying, he was in fact a net seller. We all know about the airlines and the picture he painted of how that industry is going to be going forward. You take another good example is an investor like Ray Dalio, one of the other very high profile investors that you'll come across in the space, massive hedge fund manager. He's been calling for feels like months and months now, years, since he came out with that paradigm shift article, basically saying this next decade is not going to look pretty. And more or less, the sentiment from smart money has definitely felt like they're not rushing in to go in and buy stocks. And I actually came across a video that I watch, a channel that I watch, a friend over in Australia. His name is also Brandon, but the indicator he chatted about in that video, in his recent video, was the Shiller PE. And this is yet another indicator which is kind of flashing some bad signs. The Shiller PE, quite simply, you can think of it as a PE ratio, a normal PE ratio, but over a 10-year rolling period. So this goes actually back, I should say, 10 years. And I believe this was on the broader market, on the S&P. But the Shiller PE, one of Buffett's favorite indicators to look at, basically telling us that prices right now are about double relative to the historical norm, at least relative to the amount of earnings that, in this case, was from the broader market. You could use a Shiller PE on any stock. But point being is that things do look expensive if you look at certain ratios, that being one of them. And it's quite clear to see that the big super investors feel that way. And of course, to kind of finish this off, a point I had here, which again, we don't really know how this outcome is going to affect us going forward, but all of this money printing, all of the stimulus, it can only prop us up for so long. And really, you can think of it kind of like a temporary relief. You'll often hear the term, it's like putting a Band-Aid over it rather than actually fixing the problem. And that is the very simple way of putting it. That is the reality. And as I touched on in that last video, I'm not in a position here to claim to know how the long-term effects of this are going to be, how we're going to be impacted, but you can't argue with the fact that this does feel just like a little band-aid, or a big band-aid, I should say. But we're more or less just kind of pushing it off and just providing this temporary relief when in reality, companies are struggling, people are struggling with their jobs. We don't know whether our economy is going to get back to where it was, assuming a cure comes out for this virus. I think it's fair to say that even if a vaccine were to come out, a lot of jobs would still not be able to get back to where they were with the distancing, as we touched on earlier, and just the, you guys get what I'm saying. It's just, hey, we maybe have a very new norm coming forward for us. And those are some of the reasons why, again, you can pick and choose which ones you feel are more important and have more weight to you personally. But those are a compilation of reasons that if you want to look at it from a negative light, from a negative standpoint, you could absolutely argue for. And it's very easy to take a negative doom and gloom approach on the market. I find that's really some of the easiest things you can do. I guess I shouldn't say that. You could look at it positively, you can look at it negatively, just depends on where you stand. But I think it's very hard to argue with some of the points that we covered today. Again, I want to make quite clear, not quite clear, I want to make very clear that this is not what I believe should happen or will happen or is going to happen. Same as the bull market video where we talked about all the possibilities that this market will continue going up. I would never be extreme on one way or another. I just kind of sit down right in the middle and we'll take it as it goes. That's really the best thing we can do as investors. I did kind of promise at the top of the video that I'd give you some advice on how to handle things. If the stock market were to crash, let's assume tomorrow or today as you're watching this video, excuse me, the stock market is plummeting, or a week from now the stock market begins to crash and we do enter into a decade-long down period. Well, how do you handle that as an investor? It all comes down, and this is assuming you have time on your side. I don't care what your age is, it's more about a time horizon, how long you plan to invest going forward. If you believe in the system of the stock market, if you believe that equities, stocks, companies grow and prosper over time, the best thing you can do is just simply continue investing into your portfolio, continue adding money whether the market's going up, whether the market's flat, whether the market's going down, and just ride it out. Because, again, for all the reasons we talked about today and in the last video, these are more or less factors that we can't control. I can't go out and change the fact of how much the government or the Fed is going to pump into the market. I can't control whether a vaccine is going to be produced and created tomorrow or a month from now or a year from now, or whether there's going to be a second wave of a virus. These are all beyond our control. And what we can do as investors is make sure that we have a strong portfolio that's well balanced, that's kind of structured, kind of suited to our own personal needs and goals. And we can constantly be adding from the work, if we still have income coming in, if you got money set aside, constantly, slowly growing, pitching into this little snowball and getting your portfolio growing over the years. When you look at how to invest into a potential down market, which again could be coming, the investors that get out of that well are not the ones that try to time it and pick out a bottom, but they're the ones that are constantly averaging down. And you can think about it, if you're buying on the way down, like I know someone will look at a chart and say, well, it's going to be 6 years till we break even, or 10 years till we break even, assuming a worst case scenario and the market dips down. That's absolutely true if you bought and you just let your investments run. But if you're buying on the way down, if you're buying increments and slowly contributing money into your portfolio, all of those lower purchases are absolutely going to be showing a gain. And that's really the whole idea between dollar cost averaging, lowering your average cost basis and investing into a down market. Really, you can follow that strategy into any market, but it's proven to work, and that would really be my advice, or just kind of what I can pass along to any of you guys. If you're in it for the long haul, we do go through crappy periods as investors. There's years that are great, there's years that are not so great, and if you believe in the reasons that we talked about today, we very well could have a down year, a down couple years in our near future, and that's just the way that it is. If you guys enjoyed my thoughts on this video, you can feel free to give a thumbs up on this video if you liked it and if you enjoyed. I'd love to hear your opinions on whether you agree with my thoughts, disagree with my thoughts. Again, these aren't necessarily my thoughts. Like, I'm not trying to say I believe in this. I'm just trying to pinpoint all the potential negatives. But if there's one that I left out, feel free to leave it down in the comment section below. I'd be happy to hear from you guys. In fact, I really want to hear from you guys. So leave a comment down below. If you're not subscribed to the channel, we post videos like this every week, often 2 videos a week. And hopefully we're going to be pumping out a lot more videos for you guys. That's really the next big wave here on the channel. So yeah, hit that subscribe button, hit the bell for notifications. That's really important so that you get notified when I do make a post. And then of course, we do always have our Investing Academy. So if you're a beginner in Canada and you have money set aside, you're not currently investing, or maybe you're just doing it, but you don't really feel you know what you're doing, click the first link down below. You can learn more about our process. We're taking a beginner from scratch, as if you knew nothing, through the entire process. Step by step, we'll make sure you have a really strong foundation. That to me is just so important when it comes to investing. We'll make sure everything's clear, simple to understand, and you get to join our community, meet the other students. It's super, super cool. That's that first link down below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.